investments, and then we are looking at valuation of real properties. That is chapter number 3. Very, very important. How do we value the properties? And we shall be able to look at the bigger scale properties. And then later on, we look at the unit, like the unit trust, like what we call the rates here. How do we value rates? Real estate, investment, trusts. So we shall be able, that will be the next thing. But for now, we are looking at this question. There is a very, very important question that I would want us to look at. I would want you to look for it as I introduce this. So the question that I will be doing here is quite an old one. It is September 2015. September 2015, question number 1C. September 2015, September 2015, September 2015, question number 1 cow. September 2015, question number 1C. September 2015, question number 1C. Once we get that question, please put your thumbs up like this as I basically introduce this concept of what your sales comparison approach. The sales comparison approach. Sales comparison approach. The sales comparison approach. Now, under sales comparison approach, I own an apartment. This apartment, for example, could be a 3-bedroomed apartment. So, and here I am looking at selling it. So what price should I be able to charge for this apartment? It means that I look around for other similar apartments, which in this case here have been sold in the recent past. So you compare. So I'll be able to look at, for example, apartment number 1 in this locality, apartment number 2 in this other locality, etc. And then I take an average to be able to get the exact value of my apartment. So as I do these comparisons, we know for sure that you cannot have apartments in this case that are exactly identical. There will be slight differences here and there. There will be slight differences here and there. For example, you may get this 3-bedroom apartment is not a master ensuite. It doesn't have, in this case here, the bathrooms, in this case here, then we need to adjust the price. We say, fine, that is a high price, but because ours doesn't have that facility, all right, then or for example, our apartment is quite similar to this apartment in Kileleshwa, all right? But ours, in this case here, for example, the floor is not a wooden floor. It's just a useless floor. So what do? We'll take the value of that one. We subtract the value of these wooden parkesites. All right. Now, ladies and gentlemen, we are looking at this particular question, which is a very, very easy question. And now I read. Have you gotten the question, my friends? Have you gotten the question, my friends? Have you gotten this question, my friends? Have you gotten this question, my friends? Have you gotten this question, my friends? Yes. So we are reading there. An appraiser has been asked to estimate the value of a warehouse. He has collected the following information. You can see the subject property is quite a small one, 30,000. And then we have comparable properties, 1, 2, 3. You can see they are of different sizes, age in years, different. Our subject property is a 5-year-old property. The others are 9. There is 2 there which has got 4. Physical condition, ours is average. 1 is good, 2 is average, 3 is poorer. Location, ours is prime. 1 is prime as well. 2 is secondary, not very good. 3 is prime. Sales date, months ago, and then we have the sale price given there. Each adjustment is based on an adjusted sales price of comparable properties, depreciate at 2% per annum. They depreciate at 2% per annum. And then you can see additional information there. Since comparable number 1 is 4 years old, then the subject and upward. I don't know why he was giving that information. That information really should have given us percentages only. So they want us to compute the value of the subject property using the sales comparison approach. So this is a good examiner who is wishing my students what year? Success. Who is wishing my students success? Who is wishing my students success? So then what will I do? What I will do very fast is to put up a table similar to what this examiner has given us. Very similar table. Very similar table. So we have here comparable transactions. So we have here, I will first of all handle this comparable transactions here. They're comparable transactions. There are three. So we have 1, 2, 3. There are three. So we start with the sales price. The sales price. So the sales price is 9 million here. Hope you're able to see that row. The second one is 4.5 million. 4.5 million. The third one is 8 million. The third one is 8 million. Great. So then let's make adjustments here. Let's make adjustments here to fit ours. Let's make adjustments here. The first adjustment that I would want, I'm going as per the information given there. We have age in years. We have age in years. We have age in years. Age. Age in years. Age in years. So I would want to make in this case here, I would want to make comparisons there. So you can see, ladies and gentlemen, age in years, our subject property is 5 years. Look at property number 1. Property number 1, in this case here, is a 9-year property. So property number 1 is quite old in comparison to ours. So then this age, I'll simply look at the depreciation. Depreciation here. I'll look at the depreciation. So let's look at the first property. The first property, they have told us it is 2%. Property depreciates at 2% per annum. So then I'll take 2% of the first property, which is 9 million. So this is per annum. This is per annum. Lakini hii nyumba ni mzee kushinda yetu na miaka ngapi? What is the age difference between property 1 and our existing property, our subject property? Age difference, age difference, age difference. You can see our subject property currently is a 5-year-old property. And in this case here, property number 1 is 9 years. So in this case here, the difference. Remember, in sales comparison, we're looking at differences. We're looking at differences. So hii ni mzee kwetu na miaka 4, yes. 9 minus, so in this case here, times 4. So then the total depreciation there will be 2% times 9 million, should be 9 million really. 9 million times, in this case here, 4 years, times 4 years. The differential, which will end up giving me what figure? I will explain better, don't worry. I'll explain much better. So you take 2% is per annum. Remember, they told us each adjustment is based on an adjusted sales price of comparable. An adjusted sales price. So the percentage is given there will be pegged on the sales prices. So you take 0.02 times 9 million times 4. So I'm waiting for you guys to give me a figure there, and then I'll be able to explain better. So in this case here, according to Samuel, it is 720,000. 720,000. So this 720,000, should it be positive or negative? Remember, our existing property is much newer. And I would want, in this case here, these old properties values to match mine. Now, because mine is newer, it's 5-year-old, the other one is much older, then this will be a value uplift. Because I would want these properties here to be adjusted to meet. My property. My property is newer. So in this case here, there is a benefit. So I should be able to enjoy this benefit. So this figure should be, in this case here, my property then, in terms of depreciation, my property should be much superior because mine is newer. For you to understand better, look at property 2. Property 2, what do we have there? So property 2, it will be 2% times 4.5 million. 4.5 million, age differential there, it will be 5 minus 4. It's good to write like this for your revision. Because my property is 5, and then property 2 is 4-year-old. Remember, I'm looking at depreciation, incremental, or in this case here, a decreased depreciation. So can you first of all give me this figure? Remember, 2% of the 4.5 million is per annum, times the age difference, What are we able to get somebody here? Olivia, please talk to me as well. Talk to me, talk to me, talk to me. So we have here 2% times 4.5 million. Times, of course, 5 minus 4, that's 1. What figure are we getting here? So, and remember here, my property is a bit older than this. So then I'll be able to adjust that figure downwards to be able to match my property. Because property 2 now should have a higher amount because it is, it's newer here. It's 4-year-old. Mine is 5-year-old. Mine is 5-year-old. Mine is 5-year-old. Mine is 5-year-old. What figure are we getting here, Samuel and Olivia? Please give me an answer here. Give me an answer here. So you say 0.02 times 4.5 times 1. We would have written here times 1. The age differential. Age differential. Remember, I'll be putting this video on YouTube. Don't forget to follow Walimu here. We want to have a very big community of Cifa students. So you're getting here 90,000. So this 90,000 in comparison to my property, this 90,000, I need to deduct it. My property will have a lower value because my property ni mzee. My property ni mzee, because I'm comparing this in relation to my property. My property ni mzee. So my property will have a lower value like that. And then, ladies and gentlemen, for property 3, it's quite a wonderful one because I'll use here 2% times the value there is 8 million. 8 million. But you see, this is 5 minus 5, 0. Because property 3 is a 5-year-old, which is exactly matching my subject property age, 5. So this is 0 like that. 0 like that. Nothing there. So please write up to there, and then you give me a signal. You say like this. Once you're finished, just put your thumbs up like this, and then I'll be able to know what to do. It looks confusing, but once we do the second question, this will be very easy. This will be very easy. This will be very easy. So I'm waiting to get a signal from you. Once in this case, you signal, then I'll be able to go to the next property, which is what here? Physical condition. Physical condition. So can I proceed? Can I go to the next one? Can I proceed? Can I proceed? I'm so sure these brackets and these positives here will make sense as we go on. So I'm waiting for you to mention there why for yes. Or you put your thumbs up like this for me to proceed. Great. So then we continue here. Let's look at the next one here. The next one, which will need some adjustment, is what they're calling there physical conditions. Physical conditions. So for physical conditions, we can see there are properties. In this case, our property is average, not very good. And then we have a comparable. 1 is very good. It's very good. And then 2 is average, like ours. 3 is very poor. It's very poor. So let's look for the note talking about physical condition. So physical condition is not number 2. Condition adjustment, good should be 5%. Additional information 2. Condition adjustment, good should be 5%. Average is 9. And then poor is 5% negative. Poor is 5% negative. So then let's start with property 1. So property 1. So property 1, what are they telling? That property 1 is 5%. Is 5%. Property 1, remember property 1? Property 1 is good. Property 1 is good. If you look at that table, physical condition, property 1 is good. And the good, we're giving it at 5%. So 5% of 9 million. Are you able to give me this figure? 5% of 9 million. Please give me this figure. 5% of 9 million. Please give me this figure. 5% of 9 million. Please give me that figure. 5% of 9 million. Do you have calculators? 450,000, right? 450,000. According to your understanding, and I would want you to be very honest, this figure, should it be left as positive or should we put a negative there? Should we have it as negative or positive? This figure. Positive or negative? Please try. There is no harm in trying. Positive or negative? Part of whatever. Positive or negative? Negative, yes, because the subject property is poorer. If you look at the subject property, our property is average. You see, our property is average, and the property one is much superior. It's much superior. So you see, I want to convert now property one to our property. So our property is much lower. So the figure here should be deducted. Should be the opposite. Should be deducted. Because I would want property one to be poorer. I'm asking, what if property one was exactly the same? What if it was average? So then I remove this bonus it has there. Property two, ladies and gentlemen, is average. Property two is average, and for average is 0. You can see there property two, average is none, is 0. So property two is basically none, 0. So 0% of 4.5. So of course, it's just exactly the same as mine. Mine is also average, like that. And then property three is poor at 5%. Remember, property three is poor at 5%. So poor at 5%. So 5% of its figure, of its sales value, 5% of 8 million. They're putting it as negative there to confuse you. So 5%. Please be very, very careful. The percentages, 0.05 times 8 million. That will give me what figure? So we have here 0.05 times 8 million. That will give me what figure? $400,000. So this will be 400,000. But you see now, property three is poorer than my property. My property is average. So property three is much poorer. So what do I do? Because I would want these two, I'm comparing these to mine with an aim of making the figures here reflect my property, the condition of my property. So because yours is poorer, it means that for us to be able to have yours matching mine, then I need to add this figure. It has to be positive. All right. So you proceed here. So the next condition is what they are calling what here? The next condition is a location condition. These I would want to give you 3 minutes to try yourselves. Location condition. I would want you to try this on your own. Locational condition. Try this on your own. Locational condition. Try this. I'm giving you exactly 3 minutes. It doesn't matter. You don't have to get it right so long as you try. The essence is to try here. All right, so 3 minutes are over, and I see here, Olivia, property 1, 0, property 2, 450,000, something, yeah? Property 3, like that. Great, so 0, 450, 0. Let's see, let's make an argument here. Let's make an argument here. So the argument that you're making here is quite a simple one. The argument you're making here is quite a simple one. So location, you can see our subject property is prime. Prime. Comparable transactions here, property 1 is as well prime, so no change. Property 2 is secondary. Secondary will have a change. Property 3 is prime, similar to ours, nothing there, a lot further transaction there. So then let's look at what they are telling us. And the location adjustment, prime is none, secondary is 10%. Secondary is 10%. Secondary is 10%. Secondary is 10%. So basically, secondary is property number 2. So property 2, secondary. Property 2. So property 2 to be 10% of the 4.5, of the 4.5 million. Which you guys, of course, here we have said they are similar with ours, so no adjustments at all. Which you guys have gotten here 450,000. And you've told me very, very well that this 450,000 has to be positive. Because property 2 is much inferior, wherever it is, it's much inferior compared to ours. So to get to ours, then we need to boost your value. To get to ours, we need to boost your value. So it becomes what here? It becomes positive. Thank you very much. So from there, ladies and gentlemen, we go to the next one, which is sell date months ago. The last one actually, sell date months ago. Sell date months ago. Sell date months ago. Sell date months ago. So the one will be number 1 to get these 3 entries correctly. I give them 700 bob. If you get these 3 entries correctly, I give you 700 bob. And if it will be the first one, of course. If it will be the first one, of course. I must bring some competition here. Nobody has gotten my present. Time is over. We shall overcome. We shall overcome. Sales date months ago. What have they told us about sales date months ago? Sales date months ago. What they've told us here about sales date is that over the past 24 months, sales prices have been appreciating at 0.5 per month. Because comparable number 1 was sold 6 months ago, an upward adjustment of 270,000 is made. No. I don't have even read the answer. That's the answer. I don't know why they were giving answers there. So it is point what here? It is 0.5. 0.5 per month, 0.5% per month. So we start this with, so property one. So property one, it will be 0.5% times 9 million. This is per month, and you can see property one was sold 6 months ago. Property one was sold 6 months ago. Are you able to give me this figure? Property one was sold 6 months ago. Property one was sold 6 months ago. Are you able to give me this figure? Are you able to give me this figure? Property one was sold 6 months ago. Are you able to give me this figure? 270,000, right? 270,000. And now remember, we are talking about property appreciation. So it means automatically that this property is much older. So the hours here will be positive. Hours will be more because hours is current. Hours has not yet been sold. It has been there since this was sold 6 months ago. Ours is still there. We're now looking for a buyer now. So it should be positive here. It should be positive here. 270,000 like that. 270,000 years. And then property two, you can see property two, ladies and gentlemen, was sold. So it's 0.5% of property two value, which is 4.5%. And this thing was sold how many months ago? This thing was sold how many months ago? This thing was sold how many months ago? This thing was sold some number of months ago. 18 months ago. So it's much older than ours. Ours must have appreciated. It was sold a long time ago. Ours must have really appreciated here. If we sell it today, we can't sell it at the same price. So are we going to get what someone gave us there, 4 or 5,000? So 4 or 5,000 positive. And then of course, property three will be 480,000. Olivia, confirm these figures. Confirm these figures so they can see whether this ninja gets the present. Confirm these figures so we get to see whether this ninja will get the present. Confirm these figures for us to see whether this ninja will get the present. So please come and give me the total values now. Give me the total values. Total values. So you go slowly. 9 million plus 720 minus 450 plus 2.7. Plus 270,000. Give me the total values. Give me the total values. Give me the total values. So we have this plus this minus this plus this. Please try to hurry up because I have another class starting now. So the first one is 9540. The first one is 9540,000. How about the second one? Second one, you are only using your calculators here. So this minus 90,000. This is nothing. Plus 450,000. Plus 5,000. Give me a figure. So once you get the total value, once you get the total value, this is 9540,000. I don't know how much you're getting for the second one. 5265,000. 5265,000. And then number three, the last one. The last one. So we have here the size of these properties, the size of the properties. So I'm waiting for the last one, Olivia. I'm waiting for the last one. The size of properties. The size of the properties, we have 40,000, 40,000. We have 20,000 here. And then lastly, we have 25,000 here. So you give me value per foot. So property number 3 is 80. You guys have different figures. So I don't know whether it's 8880 or 8080. There's an 8 missing somewhere there, or confirm whether it's a typo, whether it's a typing error. Confirm whether it's a typing error. Confirm whether it's a typing error. Confirm whether it's a typing error. One of you has 88, another one has 80. Confirm. Whether it's a typing error. Should I use 88 or should I use 80? Confirm. 88, great, 88. So then come there and write, in this case here, value per foot. So you take the size, so you take this divided by 40,000. Please give me this figure, I tell you something very fast here. Value per foot, already we have this. It's just about dividing. You divide. So like 40,000 divided by 40,000. What figure are we getting here? So this is 238.5. So this is 238.5. How about 2? Property 2 divided by 20,000. $65,000 divided by 20,000. Yeah, don't doubt your numbers. So simply expand whatever you get to give it to me. Whatever you get to give it to me, don't doubt your numbers too much. 263.25. And then now the last one is 80,000 divided by 35,000 divided by 35,000 divided by 35,000. What do we have there? 80,000, 263. Oh. Olivia, is that for property 3? Olivia, is that for property 3? I don't know, Olivia, is that for property 3 or it's property 2? Oh, number 2, no problem. Number 2. So now about property number 3. Property number 3, 80,000 divided by 35,000 divided by 35,000. 80,000. All right. So we have here 80,000 divided by 35,000. So this gives us 253. 253.71. Somebody should confirm this. Yes. And then now we have here the size of our property, to be valued. The size of our property to be valued, regardless of the property in question, our property is 30,000 feet. Regardless. Our property is 30,000, and therefore the basis of this, you'll be able to get value of our property here. Total value of our property. So remember, this is per foot. So on the basis of property 1, our property then will be valued at what? It will be 235 238.5 times 30,000, which gives me 71,55,000. If I go by property 2 standards, it will be 263.25 times 30,000, which will end up giving me 78.97, 500. If I go by the standards of property 3, it will be 253.71 times 30,000, which will end up giving me 11, 300, giving us what total? The total here will be plus 78.97, 500 plus 71,55,000 equals. So this gives us quite a high figure, 22,663,800. And therefore, the average price will be that 22,663,800 divided by 3 properties, which we've been able to compute, divided by 3, which gives us 7,554. 7,554,600. So mtauza your property at that amount. You don't have to get it like everything up to here, so long as you've got most of your entries correct, because we normally mark entries. So I'll be able to share this video with you through YouTube, but please watch it. The 2 videos actually. Watch them over and over again. So when I come in this case in my next class, for this chapter, now what I'm left with is the concept of how do we value real estate investment trusts. Yeah, we have also various methods there, which are very, very highly examinable. So then we shall overcome. And of course, as I told you, once you get my video on YouTube, please follow me. Try to share those links with your Cifa comrades, because we want to build a very big Cifa comrades learning community. Otherwise, thank you so much. I'm supposed to be in another class now. Bye. Bye. So, Ziungu, let's discuss that in WhatsApp.